quickly, sir, before we let you go, what's the update on the green arm listing? When do we see that happen? What is the current capacity? And what's the commissioning pipeline as well?
The renewable projects, we have 261.7 megawatt so far out of the 6 projects, 5 solar and 1 wind power. Wind power is 50 megawatt and solar is 211.7 megawatt. Apart from that, we have a few construction projects, 1490 megawatt under construction solar projects. And beyond that, we are working on 1200 megawatt solar park in the Uttar Pradesh, Jalon. We are also working on 145 megawatt solar projects in Uttar Pradesh. So these are there. So we are planning that our NHPC Renewable Energy Limited, we are going to list it in another 2 years.
Oh, 2 years. Okay. All right. Well, thanks a lot, Mr. Chaudhary, for joining in and filling us in with all of those details. We'll keep an eye out on all those cues that you've given us. By the way, actually, the markets are looking pretty good. I know it's the first 20 minutes itself, but it's a good looking screen, right, guys? I mean, if you look at the number of stocks advancing in comparison to the number of stocks declining, that's giving you some heart. A few stocks, Zen Technologies, the stock that's got pummeled in the last few days, that's pending buy orders now. That's up close to around 10%. Hexaware, I think it's listed. We've got the initial rates that are coming out. Hexaware, you know, the initial price, I think, it lists at around 745. IPO price is around 708 rupees. So on the NSE, it appears there's a mild premium. Artica team will update on that front as well. Should, come up for you on the screen. And I think in the last few days, there was no premium, if you're looking at the parallel market as well. So Hexaware could have a decent listing, guys.
I mean, first time, I think, advanced decline, as you pointed out, in many days now is some 3:1, actually almost 4:1. Otherwise, we're kind of used to seeing numbers which are, massively sort of on the negative side. And by the way, a lot of the defense names as well, maybe if you want to put up Mazgaon Dock, it's a top volume traded gainer right now. Zentech, again, I mean, in that same space, data patterns is up 9%. So Mazgaon Dock, Zentech, data patterns, Garden Reach Shipbuilders, Bharat Dynamics, that's BDL, and a few others. So a fair bit from the defense space, which is starting to move up as we speak. Look at something like a Tata Investment Corporation. I mean, Tata Investment Corporation is it's aggregation of listed companies, listed holdings. And that's up, that's telling you, right? I mean, that's up 14% right now. And big volumes, huge volumes right now. KRN, which is a fairly recent listing, is up about 4%. And I think we did mention Hitachi early on, which is looking up as well. We'll take a quick commercial break here. We're going to come back with the management of Kim's on the other side. So more earnings and future outlook conversation coming up in just a bit. Stay with us. Okay, welcome back. We are about 34 points lower, but the market breadth, etc., is looking much better, and that is welcome relief, really. Let's stay with the earnings picture. Kim's Hospitals is the company we're speaking with next. Revenue growth was healthy, but margins were under pressure. Occupancy also declined on a year-on-year basis. How is FY26 looking like? What's the growth outlook, and what's the picture going to be? That's the question. Bhaskar Rao is Chairman and Managing Director at Kim's Hospital. He's joining us right now to take some questions. Mr. Rao, good morning. Great to have you with us here on the program. Thank you very much for your time. You know, I think one of the reasons why maybe profitability, etc., has remained a little sluggish on a year-on-year basis has been because of Sunshine and the Nagpur operations. If you can start there, sir, what is the ramp-up looking like? When will you be done? And just run us through those two, and then we can look at the whole picture for the company.
See, basically, the Sunshine is mainly an orthopedics one. Most of these procedures are elective, especially in this quarter is a dull quarter. All electives will keep postponing it. So that's why, as such, Kim's Sunshine is doing very well. And as we expected, in the last quarter two did very well, and even the quarter four also is going to do well. So as we expected, the ramp up is going on very well. Because of the last dull quarter every year, and especially in orthopedics this quarter on a historical basis, that's why it is not there. Otherwise, on the company side, doing very well. The quarter always is dull because we added another 700 beds this quarter. That's why the occupancy looks showing little decline. Apart from the historical Q3 will be little dull.
Okay, all right. Hi, Mr. Ravan. Thanks a lot for joining in. So with these 700 beds, what is your total capacity as of now? And also, you're sticking to that guidance, right? Revenue should double in the next 3 years. That's correct?
Yes, the number of beds will be around, census beds will be 4,300. As of now, with the adding of these 700 beds extra. And non-census beds will be another 1,000 beds. So these 5,300. And the revenue, what we are looking in the next 2 years, it will definitely grow as we promised, because the next 6 quarters coming in the next 2 years or 8 quarters, okay, the most important like Bombay and Bangalore are going to operationalize, and we are expecting a good ARPOBs in those two regions. Nearly 1,000 beds are coming in these 3 places. 2 units in Bangalore, 1 unit in Thane. And then the existing O&M contracts, what we have taken, that also going to show some growth in the next 2 years.
So Rao, Bangalore and Thane combined 1,000 beds, right?
Yes.
And when is that likely to come up? Is there a little bit of delay here in terms of starting of operations?
So basically, we were thinking of end of this first quarter. Maybe definitely it will be in the May, June. We can able to start because of after the completion of the project, we need to apply a lot more permissions from the government and all. We are on the job. The construction work is almost 95% is done. Simultaneously, we are applying for those things. So to prevent the loss funding, so once everything is done, then we want to board the consultants. Consultants are also ready to board. So when even if you advance 1.5 months is a huge cost for the loss funding, especially the consultants. The other staff are start recruiting. I think May definitely will start functioning.
Sorry, just to look at the sort of talk about Kerala as well quickly. I mean, you've got strong operations there. Overall, what will be the bed capacity, sir? I mean, by the end of FY26, by the end of FY27, just give us a sense, because you're really expanding. The Bombay, the Karnataka, of course, is a big focus area. Bangalore, Thane, which you spoke about. Just give us an overall sense.
Usually it will be around 7,000 beds, excluding the O&M beds. O&M beds will come another 1,000 beds by 27. So it will be so another 1,700 beds will come Bangalore, 1,000 beds here, and then maybe some in Kerala. And some of the beds, additional beds, are going to add in Andhra, like Srikakulam, Anantapur, Kurnool, Ongole, and Rajahmundry. And these areas will be able to add 7,000 beds by 27, maybe 1,000 beds, another O&M contract beds.
So total 7,000 beds by end of FY27. FY27. Got that.
Yes.
All right. Thank you very much, Mr. Rao. Appreciate you joining us, and good luck as you continue to execute. Surabhi.
Okay. All right. That's the latest from Kim's Krishna Institute of Medical Sciences. The market, by the way, is flashing some green. So it's a very decent recovery given the big cut. We were, remember, down 125 points at the open. And from there, the bulls have managed to climb their way back up. So it's looking good. And now they're going to be taking aim at the 23,000 mark. Well, what does the next couple of months, the remaining 10 months of this year at least, look like for deal activity, given the kind of sentiment in the secondary market? We have a special guest joining us here in the studios, Amit Thawani, who is MD and, of course, also head of investment banking at Nomura. Amit, great to have you here in the studios with us. Thank you so much for joining in.
Thank you, sir.
When we met in person last, it was December.
Yeah.
And, there was a lot of talk about hope and what the new year will bring. What the new year has brought about are challenges, whether it's currency depreciation, whether it's the equity market, whether it's tariffs. So what do you make of the overall sentiment and how that spilled over into Deal Street?
Thanks, Surabhi, for having me on the show. When we met in December, we did discuss that markets are looking somewhat high and at least overheated in certain areas. To that extent, if you see, there has been a correction. Does it overly worry people like us? The answer is no. We still feel that the deal activity will play out. Currently, there's a lot of uncertainty with respect to US and the tariffs and how the entire thing pans out. But net, if you read the global commentary, if you read, the right quality of literature, you will realize that India is going to be a net beneficiary in a number of ways. From a Deal Street perspective, if you see, despite all the volatility, despite all the, talk around, serious volatility impacting markets, Indian retail not spanning out, etc., we've had large IPOs which have actually happened.
Yeah.
Whether it's Hexaware, whether it's Dr. Agarwal's, whether some of the others. And the pipeline in terms of IPO activity looks pretty strong. I know it's a brave statement to make.
You know why? If I could just come in over here, and you're saying that the deal pipeline activity still looks strong. I'll give you a number that one of your peers, who was in conversation with the bankers at Axis a couple of days back, they gave us a number which made us all sit up and take notice. They said that you can still expect supply of 50 to 55 billion coming to the market across IPOs, across all kinds of ECM deals. Now, is that still possible? Is there appetite? And what do your numbers or your rough calculations say?
So I don't want to get bogged down to a number, but I think last year there was IPO activity about 16 or 18 billion dollars, whichever estimate you take, and blocks of about 20 billion dollars roughly, which was the highest activity on block side. We normally expect Deal Street to revive with blocks, which is already underway. Yesterday there was a large block that happened. I'd be sort of assuming a deal activity of anywhere between 35 to 40 billion dollars happening, over the course of next 12 months, or 12 months could become 16 months. I think your audience should also realize, deals can sometimes take a little longer. So it's not about deals getting called off or deals getting sort of out of question. It's more about sometimes timing that you have to play into. And overall, the quality of the supply of paper is quite good. Which means that if in a particular month you're not able to price it, you'll price it the next month.
Absolutely.
That's how we see it.
Amit, morning. 35 to 40, that's the total equity supply you're talking about, right? So that's already a little lower than what we heard earlier. But those numbers...
These numbers pan out. You ask them in the second half of this year, this number could be higher.
And I think it's also a function of the market, right? They self-correct and they go up and they go down.
Yeah.
And all that will happen.
And what happens is also, you see, as you have seen a sudden rush out of liquidity, you'll see a rush off in liquidity also. So these things happen nowadays. So you have to play it by the art.
But we've had a few years of extraordinary markets, right? You wouldn't disagree with that. It's just incredible the amount of sales we've had from, not just the primary market, but promoters, early investors, PE, funds, for a variety of reasons. I mean, it's been natural. Everything is cyclical, right? Everything reverts back to mean, one way or the other. You think this is going to be that year? What is your sense, Amit?
See, people are forgetting the quality of supply has been pretty good. There may be a bit of pricing aspects which are...
on supply, quality supply will only will be wiser in a couple of years from now. I mean, it's been good. I don't disagree. It's not been crappy like in earlier cycles. But
so once you have a quality of supply which is good, as I said, there can be timing mismatches on issuances. Issuances are not going away. You could have a scenario where 1 or 2 months extra taken to price an IPO just because of volatility conditions or liquidity conditions, but the IPOs happen. It's a matter of sometimes a bit of more push into the market and waiting for the right liquidity conditions to price them. But the IPOs will happen.
All right. Amit, I wanted your view on this.
We are also becoming a deeper market.
Yeah.
Let's not forget, we are not today almost a $5 trillion kind of a market cap country. So you cannot compare that just because the last 3-4 years there's been a good amount of supply, so it has to flat out.
No, actually,
it's a function of liquidity, like you're saying, and with the kind of domestic institutional liquidity in the market. But the question is, with the market sentiment and the market being as challenging as it has been, whether you're confident of seeing that kind of liquidity to push through the blocks, the deals, and the QIPs.
Last year also, FIs were significant net sellers on the secondary market.
I wanted to ask you on that.
But they were significant buyers on the primary market.
Exactly. So I wanted to ask you on that, right?
These are cycles. These are trading patterns that investors will follow for themselves.
But the only thing is that the bigger fear is that will supply overwhelm demand. I mean, markets always overdo things, right? You will agree.
So that's what I said. So it will pan out. So if you're getting too much supply in a particular month, it may not happen that month. It may take 2 months more. So it will roll over. Some amount of supply will roll over.
Because if you somebody like Narain, for example, he said this on a public platform. I think he was reminiscing about the late 90s. I mean, that big bull market was ended by too much supply. I mean, it died. I mean, the market died.
It also ended up with a lot of crappy supply.
But as I said, we'll be wiser in hindsight, right? A few years down the line.
Is much better.
Well, you look at the last 5 years.
Yeah.
The quality of supply is much better.
So, Amit, I wanted to ask you about this, because on a day-to-day basis, we track the FI flows in the secondary market, and they have been negative. But as you mentioned, yes, a lot of that money actually has gone into the primary market, in QIBs, IPOs, etc.
And they made money.
And so if this supply is going to continue, or if we're going to see the IPO market is going to be very, very vibrant, the FIs actually have a reason, right? They're making some space in the secondary market, and they're pumping back that money in. So do you think that we could see more of the same? Or, the other point of view is if the market's a little bit subdued, the IPO market gets a little bit subdued, which in turn could force the FIs not to sell so much. Your take.
So it is also sectorial dependent. It cannot be broad brushed.
Okay.
There will be pockets of market where investors may be just net sellers, period. There is just overpricing, a perception, or otherwise is that it's overvalued, and they'll be net sellers. They may not participate in IPOs also.
Okay.
But these are sectorial rotations. These are market cap rotations that every market gives you the opportunity to enter. So large caps are right now, seen as a favored bet. Now, are there enough large cap IPOs coming to the market? The answer is yes. So will they find favor in the market? The answer is yes. So these are cycles you have to play along. As I said, as long as there is no material challenged supply coming to the market, I think the market will absorb. There may be time periods which might get elongated.
On the kind of issues, just to complete this point, then we have to talk about M&A as well, which is the other big piece that you track. But just to complete this piece, in terms of the kind of deals that we'll see in the ECM space, last year's big headlines was, say, a Hyundai coming and listing in the Indian market, and the issue got, sailed through beautifully, right? There's a lot of, buzz around LG now. But the market sentiment, again, is a little different. So what are the kind of marquee headline, IPO deals or even exits that, maybe large PE exits that we can watch out for in the next couple of months?
Oh, definitely. There are bank-led NBFC IPOs. There are tier 1 large cap financial sector IPOs, which are in the coming. There are a number of large private equity, healthcare services related IPOs, and these are not sectors which are overly cyclical. These are largely defensive sectors. and they will find receptivity in the market. So watch out for healthcare services space. Watch out for large financial space.
Okay.
You know, speaking of deals, look at these guys. They went away in 2000. Now they're back, and they're back at a much, much better price, 739, and that's a good premium, about 4-5% in a market like this over the
and
upper
an
end of the
IPO which
price
was not
band.
necessarily hugely oversubscribed.
Absolutely. I think till the last date wasn't subscribed as well. So that's a very, very good listing actually. And if you track, the grey market premium as well, till yesterday it was absent. It moved into a bit of a discount over the last few days as well. So 5% uptake is good. 745.
And they're going with the Chariots of
Incidental to
Fire
what we
theme.
were talking.
They're going with the Chariots of Fire theme, one of the most classic pieces of music there. That's a big comeback by Hexaware. But you were completing the points of, we will still see some big global listings in India apart from the...
Definitely there are in the works. Definitely. Sometime, as I said, it's a question of timing. Hyundai was also in the making for a while.
Yeah.
So
LG is the next one.
there are many of them.
Yeah. So, but
There are many of them. Let me put it that
you
way.
think what's motivating them? Some of these larger Indian subsidiaries of MNCs to list here.
2 or 3 factors, right? I think it's spoken of. One is obviously the valuation multiples. There's clearly a valuation arbitrage. It actually re-rates the parent in some ways. Second, a lot of these are large, matured, well-run businesses in India. They ought to have a local Indian identity in terms of a listing. It also helps in terms of corporate governance, disclosures, in terms of employee retention, etc. So I think these are well-documented reasons, and I think it's catching up the fancy.
Number one is valuation.
It's an important one. It's a very important one. From the parents'
I mean,
perspective,
there's nothing wrong with it, but it's just...
it's a very important one. And why should not be?
And sorry, we're going on with these equity market questions, but I'm coming to the M&A deals in just a bit. Last question on ECM. The last 2 years saw a lot of new businesses list as well, whether it was platform companies, consumer companies, big names in the renewable space, and you folks worked on, some of those deals as well. Any more sunrise big issues coming in? And again, I don't think this market would have the appetite maybe for loss-making companies right now. What's the mood in terms of the financial quality that you have to bring to the secondary market?
So there are 2 themes. Clearly, anything to do with clean energy related verticals, and it's both the infrastructure ownership businesses as well as businesses linked around that. Especially given, again, you can call it China plus one or supply chain benefits that India is getting. A lot of them are also export driven, and they will find receptivity in the market. It's a segment which was non-prevalent in the Indian markets for a while. We opened up that segment with Wari last year, and in many ways we see supply of paper coming in and around that area. The question around loss-making sort of tech-driven businesses, actually a lot of them are not necessarily today just a story. They are real businesses with real sort of business models which are working well. They may be loss-making, but that's simply because they're supporting growth.
Sure.
It's a very different cycle from 21, 22.
Sure.
And I think the market will support them. Maybe right now the market is a little subdued for that. But as I said, these liquidity conditions, market conditions change.
So Amit, now coming to M&A, which has also been very, very active.
Yeah.
For 2025, what are the kind of big mergers and acquisitions? Inbound, outbound, what are we in for?
Clean energy will be active. It had been somewhat subdued last 18 months. Clean energy related deals will be active, albeit it not be just another international player coming and buying. It will be a lot of domestic consolidation as well in and around clean energy related sectors. You will see some financial sector activity, which had been kind of not so much last year, but it has always been in spurts. I think we are at the cusp where a lot of players in the financial sector realize the need for consolidation. You will see continuous activity around broadly industrials. And that's pretty broad, right? So it's auto-related, it's some of the industrial sectors related activity. I don't particularly see too much of outbound, but in pockets, yes. There will be pockets of that. Last year, there was some activity around outbound, both on the pharma space, on telecom side. So that will be in pockets. I think the question you might also want to ask me is what happens to inbound? Strategic. Is it a very big playbook? The answer is no, but it's an important playbook to watch. It has been that way for the last 3-4 years, and you will see inbound activity, strategic, from Asia, from Europe, coming into India.
All right, Amit, we'll leave it there. Thank you very much. Good conversation. Appreciate you coming down to our studios. And look forward to our next one.
Thank you for having me.
Thank you. All right, well, let's just look at the market, which, by the way, is in much better shape as compared to the last many days. 30 points higher on the Nifty. But more importantly, it's some 5:1 advances to decline ratio. Mitesh is back with us. Mitesh, what do you make of the price action so far?
I like it a lot. Earlier in the day also I said, and I've been saying this for the last few days, that anything close to 22,800, 780 zones should attract buying. I think that's again happened. And with every bounce back, while we haven't seen a big reversal as yet, I think the hourly indicators are getting slightly stronger, and that could, eventually lead to a stronger bounce back. I suspect 23,100, 150 is the first zone to watch out for on the upside. Once we start clearing that, then I think, we'll have more comfort with aggression on the long side. But for the timing, it does look like that we might head towards those levels. With that, I have a few buy calls. Bosch Limited, I think from extremely oversold levels is trying to reverse. So buy here with a stop below 27,100 and look for a target of around 28,400 to about 450 on the upside. And the other one which I like is BPCL. BPCL, I would want to see the stock clear these levels of 255 half, 256. It's trading at about 254 half. So buy about 256 with a stop below 251, and I think the first target on the upside should be around 268 to about 270.
Okay, all right, got it, Mitesh. Thank you very much for that. We will take a quick break on that note, and now we'll come back with more in just a bit. Welcome back. So the equity market has managed to recover from the opening cuts. Let's figure out what's happening in the world of commodities. We have Manisha joining in with the latest. Manisha.
Well, thank you for that, Surbhi. I'm looking at the gold prices because we're trading yet again to very close to all-time highs of $29.40 an ounce. Well, there is tariff uncertainty, which has continued to drive safe haven buying in case of gold. Add to that the geopolitics and the way that we've seen global central banks continue to buy gold. Actually, global central banks have been net buyers in the last 15 years when it comes to gold prices. And then the investment demand also has been on the stronger side. When you look at the price increases, well, gold has been gaining for 7 straight weeks. Now, that is a chart that tells you on what we've done in sense of prices. So after 28% of gains in the previous year, we are up by 12% in gold prices for 2025 as well, clearly outperforming various other asset classes. Also, when you look at the kind of gold buying that has been happening in US has been quite strong. We do understand that a lot of banks had gotten shut there and they're buying gold from various global markets to give delivery onto the COMEX exchange there. So that really tells you on what the US markets have done. 5th of November, that is when the US President Trump was chosen. So we know that date, 532 tons, is what US was holding in sense of gold in its inventories at that point in time. By the end of December, this had gone up to 681. By the end of January, and that is where the tariff conversation was pretty high, we saw the gold holdings on COMEX gain up to 1,000 tons. So double off where we were on 5th of November. And then by 14th of Feb, that's the latest data that I have, we've gained up to 1,164 tons. And the markets do believe that by the time it's end of Feb, you could be looking at 1,200 tons in sense of gold holdings in case of COMEX there. I want to put out another chart that tells you the kind of imports that we've seen from Switzerland, that is the biggest exporter in sense of gold, on how those numbers have moved. Now, as you can see, we've seen Chinese and Indian numbers continue to decline for the month of December. But when you look at the US numbers, that's a big jump that you've seen. And that would tell you on what we've seen in sense of December. January numbers are expected to be on the stronger side as well. This is the kind of imports that we've seen from Switzerland, as you can see, last year to this year. And that number, while has declined in India and China, as you can see, the US numbers have been much on the higher side. This is a move when it comes to gold from futures to physical. UBS, HSBC, JP Morgan, all of them actually have been getting in gold into US, and those numbers clearly tell a story there. I also want to take you through on what Goldman Sachs has said in a report that came in yesterday. They're talking about 2 scenarios, and both of them, by the way, are bullish. Goldman Sachs says that they expect the gold prices to go to $3,100 an ounce, and this is on the back of ETF buying and central bank holdings as well. But they also think that the prices can go much higher, up to $33 an ounce as well, if the policy uncertainty and tariffs persist. But here, I also want to show you on what Capital Economics, as a report has put out. They believe that the prices will go to 3,000, but they also expect the prices to decline all the way to 2,750 by the time it's 2025 closing curtain. So clearly, very volatile gold prices going forward. But at this point in time, this is the best Trump trade that you've seen in 2025 till time.
All right, Manisha, thank you very much for that. Absolutely one-way rally as far as precious metals, gold specifically, is concerned. We'll take a quick commercial break here. We're going to come back and Market Master segment on the other side. Lata will be in conversation with Sridhar Sivaram on markets. And where do we go from here? That's coming up.
Welcome to our Market Masters segment. Well, the markets is top of the mind, so no point discussing economy at this juncture, the manner in which the Nifty is plumbing new depths, or the persistent selling by the foreign funds has left everyone connected with markets weary. So here's a person who has seen many cycles. Joining me to give us some advice and some context of what we are facing is Sridhar Shivram, Investment Director at NAM Holdings. Sridhar, thank you very much for dropping in. And I can't tell you how many people will be, hanging on to everything you say, because there's a nervousness and unhappiness in the market. So first up, are we anywhere near the bottom, you think?
So Lata, it's always very difficult to predict short-term movements in the market. But as we discussed even last time, that 25 there's a lot of uncertainties, and Trump being just one of them. So what happens to tariff, how that plays out in the market. I think currency is the other issue, how our currency plays out. And my fear is that the currency can take the market up or down. If we have a stable currency, then the markets can be stable. If we have a volatile depreciating currency, if China does anything. So many variables. So in my view, 25 could be sort of the negative year. We had 8 positive years, and it's highly possible that 25 is the year where we get negative returns, but it forms a base for the future. I mean, you can't have one-way markets. So I think in my view, this is quite healthy. We had a lot of froth. Some of it is already gone. We think some more is left in the small cap space. So that's how markets are. I mean, it's volatile. It's never one way.
No, we must come to the real story, the growth story, which, the India growth story itself remains. It's a question of the delta, faster or slower. But before I come to that, just one more question, since I will know whether the shoe is pinching you and how much. Are you in cash now, or are you reducing cash levels, or are you increasing cash levels? What's the position?
Yeah, so as a house, we do have some cash. We've been bearish, or we've been cautious since September of last year. And I think some of it is getting utilized as we speak. As I said,
getting utilized. So
yeah, it is. And as I said, that there is opportunity right now, but there is also uncertainty ahead. So you don't want to put all your money to be used up at the same time. So it's a wait and watch, but at the same time where you get opportunities, we are looking to add. So 25 will be a challenging year. So I think everybody will get opportunities if you have cash, and if stocks which have strong earnings growth may fall lesser or even go up. So it's left to individuals to figure out. So
the micros will dominate.
Micro will dominate. Macros are not very favorable. Let me put it that way.
Okay, fine. Let me get to the micros, but in a macro fashion. See, while we must blame currency and Trump tariffs and what China will do next kind of milieu, we can't get away from the fact that our earnings growth slowed and slowed precipitously. Low single digits. When did we last see that? Yeah. So what is your sense about earnings growth? Is it just going to be as good as nominal GDP? No, so we've had great.
So Lata, we've had great earnings growth. If you go back, say, leave FY25, if you take 21 to 24, we had almost, almost 20-25% earnings growth. For the first time in my history, I saw analysts upgrading earnings because every year we normally start at 17-18%, and then either we go down 1 or 2% or we stay there. It was in the last 3 years we had significant outperformance. That has reversed in FY25. We think that FY26 numbers could also get revised downward because there is some slowdown in consumption. We saw the FM also using the budget to boost consumption. So there is some slowdown in consumption. Even capex spending hasn't really picked up as much as one would have expected. So I think there's a macro headwind. Within India also there are some macro headwinds. This happens in a market. I mean, every market, every country goes through cycles. And maybe we are heading into one of those cycles where things are tough. But then we emerge from there, right? So that's how the markets also emerges. So,
but isn't this combo very good? We have a budget that has given us 1 lakh crore more taxpayers. So each one of us has got some 60,000 to 1 lakh rupees more to spend. As well, the liquidity is improving. As well, rates are headed down. Is that combo good enough to pull us out of the rut of the third quarter earnings?
So Lata, all tax cuts are welcome, but if I remove my selfish views, which is that I also got tax benefit.
80,000 more.
I think, a petrol diesel cut would have been a far better way of doing it, because only 2 crore people benefited from the tax cut. Am I going to spend more out of that 50, 60,000? Possibly no. It may just go into my bank
Especially when the wealth effect is eroding.
Yeah. So I think a petrol diesel cut would have immediately gone into the system, and it benefits the entire 140 crore people. But if I'm in the FM shoe, it's a very difficult shoe to handle. So I cannot really complain. Everybody will have their own views. This is my personal view, that would have been a better way. Will all this have an impact? I think it will take time. Liquidity is something every banker is screaming. I think we need more liquidity. So if you speak to bankers, they say that what has happened is very good, but we need more of that. Rate cut, I think 25 basis point for that to have a transmission effect. See, today's newspaper is talking about corporates raising rates to get into the bond market. So there is no transmission effect. In fact, increased liquidity will have better transmission effect than a signal of a 25 basis point that we got. So we'll have to see how this plays out. But I think we are in the right direction. There is a cyclical slowdown. RBI and the government are on top of it. And it'll play out over a period of time.
Yeah, no, it's not very easy. You can't have an helicopter, like Bernanke said, and drop money.
Yeah, exactly.
Liquidity will take its time to get into the system. And, when we asked the SBI chairman, he said the rate cut will be transmitted maybe 2 quarters later.
Yes, exactly.
Right now, people are desperate for deposits.
Yeah.
So, okay, you did say that this is going to be a micro year. Where would you look at?
So, as I said, in a micro year, so to start with large caps, they look far better. Even now, when we see some of the mid caps or the small caps, we very, very rarely invest in small caps. They still look quite expensive. From their own historical perspective, also keep in mind that we think earnings will also get cut. So there is a double whammy for them as the economy slows down. Otherwise, it is really stock specific. We do like financials. So that's a segment that we like. Discretionary consumption is the other one. As you mentioned, that the top 2% of India gets more cash, more money in their hands. We think it'll more...
So hotels, airlines...
Yeah, so we think it'll be more discretionary. It won't be staples. I mean, I'm not going to buy more soaps because I got